Okay, thank you for joining me this afternoon on this live session. So, currently it is the 17th of June 2024, so we're 1:30 p.m. at the moment. Okay, so it's Monday. So, beginning on the dollar index, as always, we can see that prices come out of here very, very nicely, had that pullback and continued to the upside. You can see I've got a Fibonacci drawn on at the moment. This is just because basically in the event that we do have a pullback, I'm going to be looking for a discount to look for this to potentially reverse. So what I've found within this discount is this 4-hour imbalance right there, which you can see is just below the 50%, so below the equilibrium price. This area we drew on together last week. This is a 4-hour supply that actually swept a minor level of liquidity before breaking lows. You can see prices had a reaction from that. I've just drawn that on at the event that it's just gonna have a catalyst for a pullback. Basically, it's not an area which I expect price to now put in a new low. Put it that way. I've just drawn it on because I'm expecting some sort of reaction from there. If we do, then I'm going to look for that. Or if not, we can continue up because we've got these 4-hour areas which we spoke about last week. So just to recap, we've got a 4-hour liquidity POI right there, which is a supply. So the bullish candle before the bearish move. We've got a 4-hour imbalance below that as well. All right. And obviously, as we've spoken about before, the 4-hour time frame is bullish at the moment with this structure right here. We've had a break of structure here, higher high, higher low, higher high. We've had 2 higher highs on the 4-hour. So I do believe this can continue up. Like I said, if we can have a pullback, very nice, then it's going to affect the US crosspairs if that was to occur, and then continue up potentially. Or we can just continue to blast through here and even potentially take those highs as we've spoken about before because of the bullish structure printed on the daily, following the blue dots, the low, the high, higher low, higher high, come into discount, respect this daily demand, come back up, move away, respect this daily demand. Okay, and we've got relative equal highs, relative equal highs. So liquidity and liquidity right there. So that's the DXY. Let's have a look before I go on to the currency pairs themselves. Let's have a look at the news events coming out this week. Okay, so we had some news come out actually. 1:30 p.m. US news, which looks like it was positive for the dollar. So above zero indicates improving conditions. Oh no, it was negative for the dollar, sorry. Yeah, so it was better than expected, that's why it's green, but it's still below zero, which indicates worsening conditions. It's a leading indicator of economic health. Businesses react quickly to market conditions, and changes in their sentiment can be an early signal of future economic activity such as spending, hiring and investment. Okay, so with this being negative, that could make sense as to why dollar could react from here right now. Because this could be, as I've said, a catalyst for a pullback, could be ready for a short-term pullback. This negative news could push it into there potentially. Although it's not really done anything on the chart, to be honest. The 1:30 news, obviously that was 4 minutes ago. Okay, no worries. So Tuesday, so tomorrow, 1:30 p.m. once more. We've got core retail sales and retail sales. We've got CPI on Wednesday for the pound. Could be very, very interesting. More pound news, US news, Thursday, unemployment claims. And a heavy news on Friday. Heavy news day on Friday. We've got pound, retail, euro, flash manufacturing PMI, German, French, more pound news flash as well, and then US flash. So it could be a very, very volatile Friday this week. Hopefully we can get some setups leading up to that, and then potentially the news events could take the price to TP. That's obviously the ideal scenario. So let's move on to the pound yen. So the pound yen, this was a setup that we marked up together. So on Friday, you remember on the live session that we took a buy position live together. That got took out at break even, unfortunately, but price is still moving in that direction. So the bias hasn't changed. It's just that the entry was stopped at break even. Nothing really wrong with that. It's just a trade management technique. You know, it's always about managing that risk and managing the trades as well. It does go hand in hand. Obviously, we've got rules for a reason. So just touching on the daily time frame. Let's go to the weekly a moment, actually. On the weekly time frame, we can see that price reacted to this. Two weekly bodies, the close, the open. Price spiked through it, but that doesn't necessarily mean we have to now roll over to the downside, because as you can see here, price did a similar thing. Price spiked through this one right here, and then the following week just absolutely blasted through it. Similar one there, look. Actually, that was a straight closure. Actually, no, to be fair, this one wicked through, look. So this is what I'm talking about right now. These bodies here. Price wicked through that. Following week, bullish, and then we closed above. So it doesn't necessarily mean we're going to roll over to the downside. It's just a short-term reaction by the looks of things. If we go down into the daily time frame, you can see what price reacted from. This daily support handle to the close and in the open of this candle. Price comes down into there very beautifully and moved away. This is what the trade was taking off of, this level of support. Also very visible on the 4 hour. You can see the price is moving bullish. We had a 4 hour 3 pin right there as well. The actual trade was taken from the 30-minute. Just there, look. So if we hadn't have put that to break even, this would now be in profit. But it is what it is. Sometimes this happens. So that was the trade there. So what I'm expecting price to do is to at least come into here. Following the 4 hour bullish structure though, however, we could be in for another higher high. I'm not putting my money on it at the moment, although if a setup does occur, then I will get in the buys, definitely. But for now, I'm just sitting on my hands, just waiting for a setup to roll through. You can see price came into the 5618 area, moved away. This then became the new leg from the low to the high. Price came into the 5618 area and now is moving away. So yeah, bullish intentions still on pound yen. That's what I'm seeing at the moment. We do have this to the downside, this 4 hour imbalance. And remember what we've just spoken about, the news that's coming out this week with the pound, quite heavy. So this could be a magnet for price. If we want to spike around, you know what price likes to do here and there. That could be an area which price wants to revisit this week. Because it would still align within this discount of this entire leg, even if price came down into there. So as long as this low remains intact and we don't have a candle body closure on the 4 hour below here, then still bullish on the 4 hour. So like I say, even if we come down into here, from here, we're still bullish, and that could be used to then take price higher. So there is that as well. Not only that, we've got liquidity there as well. So we've got a nice low there resting above that imbalance. Textbook setup, really. Could move away from here, but like I say, I'm not really bothered at the moment. I'm not interested. I'm not in a trade at the moment on this. So whatever will be, will be. So that's pound yen. Okay. And also as well, what we'd want to see, if we want to continue bullish, a nice closure above this short-term ceiling would be nice. Obviously, price printed that 28th of May, 29th of May. So the closure of the 28th of May's day open of 29th of May has been used once. Okay, 3rd of June, used twice, 12th of June, 3 times, 13th of June, 4 times, 14th of June, and we've failed to close above this area as of now, or as of yet anyway. Yeah, like I say, if we do close above here, then that would be very nice to see continuations up to here, because we've got a monthly area right here, sort of around the price of 206 that I do expect to see price reach into. Simple support and resistance. We've tapped into it there, had some issues with it there as well, came back up, wicked down into it perfectly there on that month's candle, closed on it there as well on that month's candle, came back through, retest, spikes through, and comes back down. And also this is still within the monthly imbalance that's right there as well. So we've got that, and if we do want to come higher, we've got this weekly imbalance as well, which is actually resting above this high. You can see I've got weekly area on there, that red line. So all I've done there is I've gathered that from the weekly time frame. Again, similar thing, similar concept, support and resistance. You've got to tap into it there. Just reading the candles, reading price action. Closure above, wick. Okay, shoot to the upside, retest, melt down through. We've then left this weekly imbalance right there, look. Okay, so that's what I'm looking at. You can see I've just marked that high on right there, just with a line, just to represent the liquidity. But yeah, does make sense for us to go higher. The only thing, as I've said before, is the fact that we've not had a decent pullback for quite a while. The only one I guess you could consider as a decent pullback would be this one here. It was like 700, 800 pips, but it was rapid though. It was a rapid pullback. Yeah, 900 pips right there. You can see the recovery, how long that took to sustain price to the upside. Closed above that high again. So from a daily standpoint, if we remember, this is the daily leg. So from this low to wherever the high decides to print. At the moment, it's printed there. But for the moment, I'm still bullish. So we could, as I've said, move away from where we are now. Okay. In 16 minutes, potentially closing another 4-hour 3-pin. Which could be a nice sign that price does want to continue to the upside. Okay, so that's pound yen. Nothing else to discuss right there. Let's move on to pound dollar. So pound dollar, if you just go to the monthly, just to recap. So we've got some monthly areas right here. Let's take that off the monthly. So a few areas to discuss. We came into this monthly support, 2 bodies, bringing it through. Price respected that, which was also sitting inside this monthly imbalance, which price is also respected. And we've had a bullish month coming off the top of that, or coming off the bottom of that, sorry. Price has then done what? It's spiked into this area here. So 2 bodies, so the close, the open of these candles. Price reacted from it once, twice. This could just be a short-term pullback before another expansion to the upside. What do we have to the upside? We have this monthly imbalance resting above this liquidity, above this high right here. So I do believe price can come all the way up into here. So 1.32 could be on the cards for GU in the coming months. Could be by the end of this year, potentially. I'm not really going to put a time stamp on it, but I do believe it can be reached. Weekly, you can see just refining these areas up slightly. We also wicked into these weekly bodies as well to the T, and then folded to the downside, and then closed this bearish candle here. So sort of a shooting star formation, whatever you want to call that. That is a bearish candle, okay, because we've rejected the upside. We didn't want to go up there for very long. Let me just put the arrow on here. It's better. So we didn't want to be up here for very long. We then came down, and then closed there. Okay, indicating price could want to come down. Okay, there is reasons for price to come down, in more of a pullback perspective though, not a reversal, because from this low to this high we've not achieved a discount of price just yet. So what I am expecting price to do is come into this 5618 area. We've also got a really nice weekly area right there that's going through the middle of that. So that's just from those bodies. We've had a wick through it, another wick of support, close below. Again, the weekly candles respecting this area, the price of 1.25489. So that's also, like I said, going straight through the equilibrium of 50 and 618. All right. So that's pretty much the weekly time frame. There's nothing else to discuss really, other than the fact that, like I've just said, I'm expecting a pullback because I would like to buy this thing from down here up to there, because that would be a phenomenal move. It makes sense from a higher time frames standpoint. So from this weekly area, this weekly support, let's say, up until that monthly imbalance, you're looking at 600 plus pips. Okay, so if you can get a decent size stop loss, you know, even a 20 pip stop loss, if you can ride that all the way up to there, you know, you're going to have a decent risk to reward. So that's the weekly. Let's look at the daily. So we've broken these lows here. This was a level of liquidity as we outlined last week. So that's now been taken. And sitting down within this 50 and 618 area. If we remember, this is the areas in which we were looking at. Still looking at these areas because it aligns with the, first of all, the discount. Second of all, it's very close to the weekly area, what we just highlighted. And third of all, it's very close to this daily imbalance. Okay, so we've got multiple reasons why price can come down into here and even react from it, but we'll have to look at the lower time frames to get that confirmation, of course. So yeah, that's what I'm looking at on GU. Further to the downside, we do have this daily imbalance, which I am keeping on my chart with liquidity resting above. So just in the event that we do spike down, potentially into here, might be an aggressive spike, for example, something like this. Spike and then a reaction and away we go. Then I'm going to be looking at that liquidity to be taken. I'm going to be looking at the lower time frames to get an entry potentially. But other than that, anywhere within here is going to be a decent area to buy, in my opinion. 4 hour. See, the 4 hour has broken structure. That low there, the most recent 4 hour point, highlighted with these red dots: low, high, lower, low, high, higher, low, higher, high, higher, low, higher, high, lower, low. Okay, so again, that was the liquidity. All of these lows. Okay, we've still got that one to be taken, but I do believe that can be reached. What I would like as well is the fact that if price can come down into here, because GJ and GU are somewhat correlated, then I think it would be opening the doorway to really send pound upwards even more. Because as we've just spoken about on GJ, there are targets even higher up than where we are now. Although we're very high in the leg on GJ, I do believe we can go higher. Although a pullback wouldn't go amiss, because I'm still bullish overall. And then similar thing on here. I am bullish overall, although I do believe we are in for a pullback now, because this would be a great area to buy. Once we go bullish once more on here, then that could, you know, like I just said, open the floodgates for pound to just really skyrocket even further. Okay, so that's GU. Got that on there as well. The reason why I've got that on there is because this now technically is within a premium of this. of this leg to the downside. So from that high down into the low, we've got that in a premium. So if price decided to come up into there, that could be a nice area to short back down into here, or just within that region. Okay, so that's pound dollar. So coupling that, obviously this is pound dollar, not pound yen. So coupling that with the dollar analysis, which is very, very important to do. Obviously we've got targets in which we can reach on the dollar, which are higher up. So if this does go higher, this is going to do what for the pound dollar? It's going to bring it down. So this is one to look out for. And then going on from there, if we can get a reaction out of here from a discount on the pound dollar on GU, and price can go bullish once more, then what the dollar will more than likely have to do is potentially sweep these highs with a wick and then come down to then now break these lows. That is a possibility, because we need to remember as well, we're still coming out of this monthly imbalance, bearish. So there is that. Okay. Conversely, if the dollar does continue to push higher and higher and higher to then reach this, on the monthly, going to the left. Let's put the magnets all on. If price does decide to basically go parabolic, for lack of a better word, that could be what we're drawn into. Okay, and then on GU, you'll notice on the weekly time frame, I had this area down here. We've got a weekly imbalance down here with liquidity above. So that's always, it's always there to keep in mind. Obviously, we don't know what's going to happen, but it's very, very important to have both sides of the fence available in your mind and on your charts. Okay. So that's it for GU. Let's just touch on to euro dollar. So euro dollar is actually wicked back into this yearly support. So just to recap, on the yearly time frame, on the 12-month, this is on the Oanda chart. I'm aware that euro dollar goes further back, but I prefer how the Oanda candles print, because we get solid bodies next to each other. Sometimes on FXCM and other brokers, they're a bit everywhere. So what we've done, we've wicked into this yearly support, so the close and then the open of this candle. So this was 2023 open and then close, 2022 open and close. So on the monthly, we've also wicked into that as well. That was last year. We've wicked into that yearly support. So on the monthly, I know there are lines everywhere at the moment, but one thing to keep in mind is the fact that this high was closed above. And then this could just be a pullback to the downside before we have another expansion to the upside. Similar to pound dollar, I have got an area in which I'm keeping in mind on the euro dollar as well, which is to the downside, this monthly imbalance. I've had this on for quite a while now, literally for over a year since we printed it, to be honest, which was, yeah, right here. So you can see January 2023. So I've had that on for a while. There's no time limit on when areas need to be reached or mitigated. That's one thing we have no control over within the markets. However, it's still important to keep these areas on, because if and when price did decide to come down into there, that would be a phenomenal area to buy from, because that would also be within a discount of that monthly bullish leg. Okay, and if we remember, we're coming out of a yearly bullish structure, yearly imbalance, yearly demand, right? So that is the monthly. Going on to the weekly, just zooming in. This price action has printed the bearish price action. But as we've said, this could just be a pullback. So in order for price to pull back, it's going to print bearish price action. It will have to do that on some sort of time frame for it to come down, and vice versa. For price to go up, it will have to print bullish structure, higher highs, higher lows. So this just happens to be lower lows, lower highs right now. And obviously we are currently within here. And as I've said, we've just reacted from, or come down into, sorry, I should say, this yearly support handle right there. So we could really start to continue to the upside. So that's one scenario. The second scenario could be that that low could be vulnerable as well, just following that bearish structure. High, low, lower high, lower low, lower high potentially, and then a lower low could be on the cards. What we did as well last week was wick into this weekly resistance that was created, so the close and the open of this candle, of these candles. You can see that wicked into it perfectly and then moved away. On the daily, this was an area which I was expecting price to reach into. It's just missed it, but it's just them daily bodies right there. And then on the 4-hour time frame, obviously this is basically the DXY but just inverted. So if I just invert this right now, it looks very much like the DXY. Because you remember the higher high, higher low, higher high. Okay, so, you know, what did we say on the DXY? We said that those highs could be vulnerable. One thing as well on here is actually a, well, something different on the DXY to the euro dollar is the fact that this high was swept and then price came down. On euro dollar, if we just go to euro dollar and make it inverted again, you can see there was no sweep here. So all of this could be taken. Okay. So that's something to keep in mind. Or having said that, price could literally just respect what we've drawn on here, because this is a liquidity POI. Price could respect this and then come off of it. At which point the euro dollar would have done something like this. So obviously come up, react off of something here to then come down, because if we just go back to normal on that, that would then still validate the bullishness of the euro dollar, because it could react from something in here. Okay, so I just want to look into that actually before we come off this call. So on the 4-hour, I know there isn't anything because there's no imbalance. We do have that. Just want to see if price reacted from that. So that's interesting. Price has obviously come above that. It looks like price has mitigated it, but it hasn't. So that's actually a bullish order block on the 1 hour, with liquidity resting above right there. So that could be the catalyst, what price reacts from, if it was to do what we've just spoken about. So this is a 1 hour demand right now. So the bearish candle before the bullish move. So that's quite interesting. I'm going to leave that on my charts, just see what we do. That's pretty much it, to be honest. We'll catch up on silver and gold and USD CAD in this afternoon's second live session. So what we'll have to do is obviously come back, just remain patient. We've got the Discord open still, so just be aware of that if there are any trades coming in. And what we'll do is, like I said, we'll catch up on this afternoon's second live session at 3:30 p.m. And yeah, so that's pretty much it. So thank you for watching, everyone. Take care. Trade safe. Thank you. Bye-bye.